Hi traders, in this video I wanted to show you something that you might be interested in, and finally I am shooting the next part of the EA coding series with ChatGPT, with AI systems basically. Now, I haven't made a video in about a week because I had work to do and I didn't have as much time to shoot YouTube videos, but every day I was like, I would do this, I would continue this series because I got so many great feedbacks from you guys. Like, most of you told me that you haven't seen really a comparable series on YouTube, so that is actually this valuable, and I am glad. I am also glad that I only started to shoot this series now that I am in this for years and not at the beginning, because now I was just counting how many parts I want to do for this series, and every part is going to be so valuable, and I think there is going to be, like, I can't even tell you how many, but many more parts of this series. So don't worry, I am not going to rush through anything. I am reading the comments. I am preparing all kinds of interesting features, methods, and everything. So, as you can see, we have the gold chart here, and I just wanted to show you how this is just it is just a range. Like, man, I have so much to say about these kind of situation that we have here. Basically, what we have here is a pain, is just pain, because what is the number one enemy of a successful trading algorithm? And it is very easy to tell. Like, most algorithms are not successful. That is just based on statistics. Those are the facts. Around 86 to 95% of trading algorithms are losing money. It means that there is a couple percent of EAs that are doing good or okay or break even in the markets. Now, most of those algorithms are actually trend traders. And what trend traders are doing, I don't want to tell the obvious, but they are looking for trends, and they are doing great when there is a trend. And this is a crucial part for you to understand. And I know many of you are like, oh man, the nomad trader has gone crazy in the jungle and he is just telling me these obvious things. Listen to me. When you are coding an EA, when you are creating a strategy, after a while you are going to notice that you can't filter out more noise. And most traders are very fascinated with the idea to have a 100% win rate EA. Of course, that doesn't exist. All those very high win rate EAs are holding some crazy big losing trade, and at the end it is all going down. It is just like a gambling tactic. So of course that doesn't exist, but you can do a bunch of things to filter out bad trades, unnecessary trades, as I talked about it in this series, like with the once per bar function. But the issue is that when you are filtering out trades, that are bad, you are going to filter out trades that are good on the other side. It is just how could I say this? It is just the life of functions and the markets in mathematics. Like basically what you need to focus on is to take like 2 bad apples from all the bad ones, but you are going to have some bad ones once, you know, once or twice, but only one good one. So it means that when you are filtering out trades, and I know it was a completely unnecessary image with the apples and stuff. I was just thinking in my mind how funny it is when like teachers are always saying everything with apples. It's just funny. So what you should do, what you should focus on, is to filter out the bad trades, but keeping as many good trades as you can. And if you developed an EA, you already know it is insanely hard, because many times when you start to filter out trades, for example, you don't want to trade, you don't want to have many bad trades in this like ranging situation, and many times your EA or cTrader is going to take a buy trade here, for example, then it is back again. Here it is useless completely. This part is completely useless. Then your EA is going to take a trade here, like, oh, it's a trend, let's go down. Oh, it is up. So it is just, I was starting with pain, you know. So it is still I still think it is. Then you have these kind of things like, okay, you won a trade here, for example, but then what is this? So it is not good. And so you want to filter out trades, because many trend traders that are doing amazing in trending markets, either if it's downwards or if upward trends, they are trading many, like taking insanely high amount of trades here, because it's so confusing and so noisy, and they are losing a ton, and basically all the money that they made, all the pips that they made in the good trends, because it is so much harder to trade. And which I wanted to show you, like, of course we couldn't exactly avoid all these markets because we are in the markets. So if you are not taking any trades here, that's okay, but how would you know when to take a trade then? It is all philosophy now, like, or you know, many things, but we could approach it from different perspectives. But you don't know, basically you don't know if this whole situation here, when you don't see this, you know, as a whole, but you just see it as it is going, you don't know if it is just a real market, as like it is a great trending market, or it is a situation that you should avoid. And the issue is to tell an algorithm which one is it, and tell it to filter out trades that are this and that way, based on the ADX, based on the CCI, based on RSI, moving averages. You are not going to trade after a while. Like, the EA is not going to take any trades whatsoever after a while when you filtered out all the bad trades. So what you should do is filter out, for example, consecutive losses. Like, it's okay if you lose a couple trades, but it is not really okay if you are losing many trades in a row here. But it can also happen because it's so hard. And so the other thing is, you can lose, like from another perspective, you can lose many trades here, but make sure that when there is a trending market, for example, like here, then like it's insane amount of pips, then you are riding it and you make a insane amount of pips, like it is a whole trend. And this is exactly what the EA did, and that is why I'm so proud of it. I am like, it is even better for this video series than if it would be just this way to the moon. That is not realistic at all. The reason I'm saying this is because I can show you what the best possibility in these markets. So we had a trend that the EA was riding hard. So you see this, like it's been 4 weeks, and the whole trend we could really harvest it crazily, and that is amazing, because when you are doing that, it means that you had many great trades and you made a ton of pips in that period, in this period. And when this kind of bullshit ranging market hits, it is exactly the ranging market that you're seeing here, your EA is not going to take a downward moment, a downward like curve, like an insane downward curve here, but it is going to maintain a relatively like a break-even, slight losses, this kind of situation. And that is the best you can do. And I am not going to be sitting here and talk about like all these things without showing you the reality of trading. So I have my best cTrader, and I could just tell you, first of all, most traders, most coders, most YouTubers are only showing you results when their EA is going up, and that is not great, because every EA, for example here, it was at the time a major drawdown, but and what, like, we made a ton more profit. So these things happen. They are very uncomfortable. They are always coming at the worst time, but it is part of trading, and you can evolve the most in these situations. I actually started to create amazing set files for this particular EA and new features as well, and the new version is coming out in 1 or 2 days. Like, I solved new parts for this ranging market, unnecessary noise, whole like, it is just a part of trading, and I could finally solve a bigger chunk of it, which is great. And so yeah, the great thing is that this EA made so many, like, it did so good in the trending markets, it gathered so much profit that we are still way above the average of even most hedge funds and institutions. But definitely retail traders just blew accounts like left and right in these markets, like with these ranging markets, for example. And especially now when we have a downwards momentum on gold, many traders lost high amounts with different, with their own strategies and martingales and these kind of things. So this is why I wanted to show you this particular algorithm as well, because yeah, it is looking bad now, but it is still at 81% in 28 weeks. It is working based on highly complex price action patterns. It is not just like, it is not the case that it is only making losing trades. It is taking pretty good trades as well, but we had, these are not losses. I was just withdrawing some money to allocate to other EAs as well, because I am putting up many new signals, because I am trying out new ways in trading, and I am also setting up multiple signals for this particular series as well. So this is why I wanted to show you this, because you you should absolutely see that in these markets it is normal if you lost some money. The situation that is not normal if you lost all the money. If you lost not just 20% in the worst case scenario, but you lost like 80%, that is completely different, because then you always have to you always have to start from the beginning, and that's not great. And I wanted to tell you that I am also recording a video tomorrow, and I am going to add something really interesting to the EA. I wanted to show you that I was experimenting with the 5-minute time frame as well, and I found great settings that are basically not really optimized. They are almost like if they were like out of sample walk forward testing sets. This is also the reason why generally this signal is doing the way it is doing. Like it made how many percent? Like it was 123% in 4 weeks. It is because all the none of the sets are curve fitted, and that is the #1 enemy of traders, curve fitting. So and it is not as beautiful as you might want it to be, but if you want beautiful curves, trading is not your friend. It is an other industry. So what I am going to add in the next video that I think you are going to enjoy very much, it is a trailing take profit, because now we have a trailing stop loss which is working amazing. I was watching how the EA is trading, because now we are at how many trades? I want to check it real fast. 136 trades in 4 weeks, and keep in mind it is not a scalper. It is just taking trades when there is a good trend. That is taking the most amount of trades then. So with all these different features like the ATR based trading, it can close trades at the best possible way, locations. I am also now a little bit tired, but I wanted to make this video, so sorry if I am, missing words here and there and stuff. Just enjoy the ride, enjoy the video. So, it is going to be a feature that not many traders are thinking about. In fact, I think if I could see all of you as you're watching this video, I would see most of you don't even know what I am talking about. Like, man, there is the trading stop. Okay, there is the ATR based trading stop, so fancy. But what else? Now, the trailing take profit is the reason I am going to make the video tomorrow, because it is so exciting to show you. And it is a perfect match for the next step. So, what is a trading take profit? When you are trading your stop loss, what does it mean? It means that, this is bullshit. I don't want to see this anymore. But it means that, for example, if you had a stop loss here and a take profit here and you entered here, it means that while you are in a good trade and you are in a long trade and, everything is great because it is going up, then you have a trading that activates at a certain percent most of the time, and if it's based on ATR, it is even better, because then you are also calculating based on the volume, which is great, which is really great. And here we have 70%. So yeah, the trading stop starts to follow your trade, and if the market is like it is going back like this, it is closing it. I think it would close it here, and that is great because you don't waste time and you just go ahead, go further. And I am going to also add the ATR based trailing stop to all my other EAs as well, because it is quite successful. The basic trailing stops I am not quite fond of, but this is great. So the issue is that most traders don't know anything about cutting their losses, and of course cutting losses is highly sensitive, because you can also end up at a point where you can't really make profit because you are going to close your trades too early. And closing your trades too early, and I'm saying this like with thousands of EAs behind my back, live accounts, everything, it is one of the worst things, because if you don't have a breathing like a range where it can move the trade and just close it very tightly, like too tightly, because there are these kind of issues as well. And I didn't really see many traders, many coders talking about this. I am not saying you should have an insanely like big stop loss, but have a stop loss that is just the optimal one for the specific currency or instrument or index. Because if you have that, you are going to have an advantage over almost, like it is like a cheat code, because you are going to have a range and you are going to have the advantage of still have a profitable trade even after going in a 1% drawdown or something like that, 0.5%, 1%. That is usually my kind of style. But there is one particular way that I like to cut losses if the market is just not great. Actually two, because I have been talking about the volatility based one. If the market is just crazily like crashing and you measure it and you close the trades earlier, it is the best thing to do. But the other thing that is not for these crazy events is a trailing take profit. It means that your trailing take profit is going to follow your losing trade, and it might seem harsh, it might seem unhuman, but the issue is that if you have a quite like a even an optimal stop loss, and you have a crazy amount of dynamic exits, but only for the profitable trades, it is usually great, because to exit trades at the best spots is awesome and it is usually working in the markets. But the issue is that your averages are not going to be so great, and long term you might be lacking some more potential, and that is something that can close your trades earlier in the negative direction. For example, at half the way, because at the end, if you are looking at the statistics and probabilities and you have an average that is like, for example, you have a 60% win rate and you have a 1 to 2 risk to reward ratio, because of this you are in a much better position. And this way you are not just waiting for an absurdly big amount of take profit, and that is not the reason why you have the great risk to reward ratio. The reason is because you have an intelligent ATR based trading take profit that is closing your trades in the negative direction before the stop loss. And it is one of the best ways, and it is great to trade with an EA, because most traders are just not able to close their trades in the negative before the stop loss, because they are always hopeful that it is going to turn around and go into the positive, which is completely normal, and many times it does. but with the trading take profit you are actually increasing your chances and probabilities. Now this is going to be the next video. I am going to do a bunch of testing on the Gumroad. I uploaded, I think, more than 10 special set files, including ones for the 5-minute chart, for the 15-minute, the 30-minute, the 1 hour and the 4 hour chart. With code, of course, so you can play around with it and everything. I hope you enjoyed this video, and I just wanted to talk about all these things related to gold and statistics. In the next video, I am going to be coding the entire video with ChatGPT and testing, so stay tuned. Ciao.